In our trader rundown, Alan Knuckman joins me now for a closer look at today's trading session. Good to have you here, Alan.
Hello, Angie.
So we have a double whammy coming in, the first day of the Fed meeting and Apple reporting earnings today. Could be a market mover. Let's start with the Fed. Rate hike or no rate hike this week?
The chances are slim and none, and they both left the building. It's not going to happen. They're not going to do anything. Looking at the Fed funds rates, the probability of a rate hike doesn't get above 50-50 till September. So that's really not on the table. We can stop talking about it for a couple months at least.
Obsessing would be the word.
Obsessing, yes. I'm done. I'm done talking about rates. Even if they raise them a quarter, it's still not going to be catastrophic. And some people are even talking about they'd have to lower rates by the end of the year. So
oh my goodness.
We'll have to see.
Okay, let's obsess over Apple ahead of earnings. What do you see in the options paper here? What is the options market saying about a potential move?
Well, we're seeing a bit of recovery. We did get down to some relative lows here last week, but did bounce and held above those August extreme lows at $92 or so. So that's a healthy sign. Came back to the $100 level. The options are pricing in about a 6.5–7% measured move. So we'll have to see. Now, this 108 level on the upside is the halfway mark of this last downward slide that we've seen. Apple's been down 20% in the last 3 months, down 10% in 2016. So it's had a tough time, but they make $18 billion profit a quarter. Okay, $18 billion. Their revenue is $76 billion.
Yes.
The PE ratio is 10, so it's not priced like a growth stock because it's not a growth stock, but they make a lot of money. So I'm going to throw out a name here, McDonald's. All right, remember what everybody thought of McDonald's a couple years ago? They thought it was over. Brands don't just go away. They're going to reinvent themselves. I think they'll figure themselves out.
I agree with that 100%. I think there was this just, and I hate to say this, but a little bit of bashing on McDonald's that was unnecessary.
Negative psychology, and it gets overdone, and that's kind of the feeling I'm getting on Apple. So let's see what happens here with this earnings, but I think over the near term, I think there's more upside potential than downside.
Now let me ask you this. 6% is what the options market is predicting. That means Apple could move up 6% off of earnings or down 6%. That seems like a pretty big move that's being priced in. Is that abnormally large?
No, it's pretty reasonable. Apple's volatility has kicked up a bunch, but if you compare it to some of its other peers, look at the other FANG stocks, it's not, even though it's a heavyweight and it gets a lot of attention, it's not in the same realm with the Netflix or the Amazon or Google. So those are growth stocks. Apple is not.
Okay, good to have you here. Thank you, Alan.
Thank you.